Welcome to Close of Business. I'm Alicia Barry. Borrowers' eyes are on the Reserve Bank next Tuesday, but those hoping for rate relief could be disappointed. The RBA governor made news this week, noting that while inflation has fallen, prices have stayed high. Fears the inflation genie's not back in the bottle flared, with the latest monthly consumer price index rising to 3% over the 12 months to August, up from 2.8% in July. The expiry of electricity rebates played a role in pushing up power bills. While the RBA has tended to place more weight on the quarterly inflation reading, the monthly data still has a number of big bank economists scaling back their rate cut forecasts. Managing Director of EQ Economics Warren Hogan is one economist who says there's a risk the next move could be up. He joined me. Warren Hogan, welcome to Close of Business.
Hi, thanks for having me.
Now, the RBA Governor Michelle Bullock this week has said inflation is back down, but it's the RBA's job to make sure it stays within that target range for the long term. What's the risk inflation could pick up again and need a rate hike?
Yeah, I think we've seen the governor remain reasonably positive on the inflation outlook, and of course their actual forecasts have it at the middle of their target band over the next few years. But by the same token, the governor has talked about the need to stay vigilant. We've seen this latest monthly CPI confirm that we've, at the very least, probably seen the end of the decline in the rate of inflation, and then open up this question of whether or not inflation could start rising again. And it's a very real risk, and it's a real risk for the simple reason that the economy is actually in a recovery phase now. We saw that start at the end of last year. It sort of wobbled a little bit in Q1, but the data we've had on this economy since May has been pretty much universally strong around consumer spending, business activity, confidence. So if the economy is picking up, if inflation stopped falling, it's certainly now a risk that we could see inflation pick up into 2026. And of course, that has very big implications for the RBA. But it really is quite clear that we're probably not going to get any more rate cuts here at all. And so the question becomes, is when are we going to start talking about the need for a rate hike?
I mean, you mentioned rate hike. How much of a risk is it? When would it happen?
Yeah, so at this stage, the normal sort of cycle, we're only at the start of this recovery. And of course, it's still vulnerable to setbacks, and we've heard that from the governor. There's a lot of uncertainty, the US economy, the trade policies, the trade war. And the other really relevant issue is that we don't have as much productivity growth in our economy as we once did. And that means the speed limit, or the ability to grow our economy before creating inflation pressures, is a lower rate of growth than before. And we're already at about 2%, or very quickly heading there in terms of growth. And that might actually be the speed limit. And the RBA governor has said as much, or implied that that could be the case, in which case the inflation could start picking up from here and be confirmed by early next year. And the conversation about rate hikes could commence at that stage, and we could see them delivered as early as the middle of next year. Now, that's one scenario. It's probably a 1 in 4. But I think at the moment, it's 50-50 whether the next move in rates is up or down. If it's up, it's probably in the second half of next year.
What about the jobs market though? Because we are seeing some cracks appearing. Anecdotally, there's been quite a bit of firing in the banking sector, and there's not a lot of hiring either. Job vacancies have fallen pretty sharply over the last 3 months.
Yeah, well, just on the job vacancies, they did fall. They're pretty flat really over the last 18 months, 12 to 18 months. I don't think the labour market as we're seeing it now, it's stopped creating net new employment pretty much in the last 4 months, very similar to the US. But unemployment's still pretty low and hovering, maybe just creeping up a little bit. But I don't think it's going up enough to have them overly worried. It's pretty much within their expectation. But definitely to your point, if we start to see unemployment go up quite a bit, they're certainly not going to be hiking rates, even if inflation's uncomfortably high, because they're very sensitive to that, and our political leadership will be very sensitive to it, as will the whole community.
Well, I mean, Michelle Bullock has mentioned uncertainty quite a number of times in her most recent communications. I think everyone's feeling that. But in spite of that, what is your base case for interest rates here in Australia? Any good news for borrowers?
Not really. I'm pretty much pulled all the rate cuts. I only had one more in there anyway for November, and I just don't think that's on the table anymore with those stronger employment numbers. Inflation numbers we've seen, and we've got to, as I said, wait for the Q3 full quarterly number. But the magnitude of the upside surprise, and more importantly, just how much higher the inflation is in the September quarter than it was in the first half of the year, it's not going to make it easy for them to cut. And then, of course, I actually think the economy is recovering. We're getting all the evidence of it. Everyone I speak to is, reasonably positive about investing. There's all challenges for business out there, but it is still an economy that's turning over, and I think we'll start to see business start to invest more. So I've got no more rate cuts, and at the moment, the first rate hike I've got penciled in for November next year. So that's quite way off. And I only have 100 points of rate hikes, so back to where we were before. So that will put some stress into the economy, but it didn't knock this economy over in 2024, and I don't think it's going to induce an inflation in 2027 or 2028.
Warren Hogan, thank you so much.
Thanks, Alicia.
As we reported on last week's show, the collapse of First Guardian and Shield investment funds has left thousands of investors demanding answers over a missing $1 billion. Now Macquarie has stepped up, announcing it will fully compensate investors of the failed Shield superannuation fund. As Nassim Kadem reports, the corporate watchdog ASIC has also put other platforms of failed funds on notice.
Yeah, Macquarie's a big bank.
Sahar Ghali was convinced by a financial planner to move about $100,000 of her super into an investment fund on the Macquarie platform.
But just the pressure to sign quick. When I logged in, I saw that it was in Shield and I thought, oh my goodness, now there's trouble.
The Shield Master Fund collapsed and Macquarie's now agreed to repay 3,000 investors that used its platform. They'll receive $321 million after the banking giant failed to place Shield on a watch list for heightened monitoring. Macquarie won't face a civil penalty.
We took the view that the public interest here warranted getting that money back now.
Macquarie Group said payments to investors will be made in full by the 30th of September, and its decision recognises the scale of the issue, its material impact on many investors and their limited access to recourse. The corporate watchdogs put other superannuation funds on notice, taking action against equity trustees for its role in the Shield case. NatWealth and Diversa are also in its sights after the collapse of another fund, First Guardian.
Superannuation funds have to be applying far more scrutiny to the products that they put on their shelves.
The collapses of the Shield and First Guardian schemes have exposed deep holes in Australia's $4.3 trillion superannuation system. The federal government's now considering policy changes to ensure the same thing doesn't happen again.
So I think we need to look at ways in which we might strengthen regulatory arrangements in particular areas.
Which comes a little too late for investors like Sahar, who've endured a stressful ordeal.
Optus is being slapped with a $100 million fine as the Singaporean-owned company faces pressure simultaneously over another issue, last week's fatal 000 outage. The telco's boss is still in the top job and has been apologising again for the communication breakdown.
There are no words. No words.
But the outrage is building.
What we've seen with Optus and with the failures with OOO is a disgrace.
It's been almost a week since Optus's outage. The company now says that 480 000 calls didn't go through as the failure dragged on for 13 hours across 4 states.
How sorry I am about the very sad loss of the lives of 4 people who could not reach emergency services in their time of need.
The chief executive went public about the outage on Friday, 24 hours after he learned about it.
I think the whole process from the beginning has been too slow, too late, not enough care.
Stephen Rue has still got the backing of Optus's owner in Singapore, and he's blaming human error during a network upgrade.
This is a process issue.
The 000 failure is the telco's second in 2 years. Last time it was fined $12 million.
This can never happen again.
Optus was fined again today, this time a $100 million penalty for signing up hundreds of vulnerable Australians to phone plans that they didn't need, at times setting debt collectors onto their own customers.
This is not what we expect from any Australian company, let alone a provider of essential services.
The Watchdog's former chair says that Optus's licence should be reviewed.
3 huge failures, 2 with the 000s, now 1 huge one on the consumer front.
What is it going to take for these companies to actually look after vulnerable people in our communities?
Just some of the questions that are still unanswered as Optus conducts a review.
To the share market, which finished pretty flat for the week. The ASX 200 and the All Ords up around 0.2% each. Gemma Dale from NAB Trade joined me at the end of the trading week. Gemma Dale, the share market is down 2% month to date. Is the September sell-off in full swing?
Look, it's been modest. I think if you look at it in context, we have really strong's perhaps a strong word, but August was relatively impressive with reporting season and earnings were not super impressive by any means. So you had this interesting scenario where the market had performed quite well despite earnings not being fabulous across the board. What we've seen since then is materials have performed really strongly. The rest of the market's been very weak. Very weak energy sector, very weak healthcare. Financials have been a little bit soft. So you've seen consumer staples have been terrible. So you've seen weakness across the board, but materials keeping everything reasonably elevated. So yes, we are off a touch, but it could be a lot worse if you didn't have the big miners doing well. Wouldn't look so pretty.
And why are the miners performing really well? I mean, obviously the gold price, and we saw the copper price at the end of the week up on a mine shutdown in Indonesia.
Yeah, it's fascinating, this story. So there's a multitude of stories always in the materials sector. The big one is very much that commodities are where you look in an environment where stagflation is concerning, where you are very concerned about elevated equity prices, where you're concerned about governments with extraordinary spending levels. So there's real concern really at the macro level where one should invest, where your asset allocation should look. And one of the massive beneficiaries is gold. You have Morgan Stanley coming out saying we're going to shift away from the traditional 60-40 to a 60-20-20, of which 20 is gold. We've not seen anything like that in decades. I mean, that's just an extraordinary call. We've seen central banks buying up gold. The price is up 40% over a year or two. So you've seen this massive uplift in one commodity really as a defensive play. And that has been fabulous for Australia's gold miners. And it tends to be, they do lag the gold price traditionally, but it's still a good place to put your cash. And then you also have copper with the whole AI story and electrification just getting a lift. So places to look.
Donald Trump, though, has slapped a 100% tariff on patent and branded pharmaceutical products coming into the US from October. How's the local healthcare sector reacted to that?
Yeah, this is another one. We've been getting these headlines all year, these announcements all year, and I think the market has taken to a less aggressive sell-off approach than we saw perhaps in April when everything was pretty traumatic, I think, for markets, having rallied very hard since then because we know that there is the taco effect, that perhaps Trump will chicken out. So we've seen a little bit of softness in the pharma sector here. CSL's obviously our biggest play in that space. They already have a lot of exposure to the US, but they have facilities in the US. So to what extent they're going to be affected, sort of a bit of a question at the moment.
And earlier in the week, speaking of these erratic statements that come out of the White House, Trump made unproven claims that paracetamol in pregnancy causes autism. That caused a bit of a sell-off in the maker of Tylenol.
Yeah, so we have this very challenging scenario where the FDA and other major medical groups saying this is not something to concern yourself with, but if you happen to be the manufacturer of Tylenol, it's not fabulous for your brand. So Kenvue is the major manufacturer of that particular brand. It was formerly Johnson & Johnson. It was spun out a couple of years ago. It's sort of mid-teens % of their earnings. They also make Neutrogena and Listerine and all sorts of stuff you're familiar with because of those consumer brands. The hit to the share price has been significant. It's off more than 20%. Concerns about lawsuits, right? So this is where markets have concerns, regardless of whether or not there's any truth to the claims. The lawsuits are going to come.
Well, still in the US, and AI deals and investments have really been behind what's been driving Wall Street over the past week.
Yeah, so many announcements, and they're almost circular now. We know all the players and we know who's going to be doing what, and then there's big deals announced. And Nvidia making some very significant investments, $100 billion into OpenAI, which is the big player, and then also into Intel, but sort of $5 billion, much smaller. That's quite fascinating. The Intel share price is astonishing, up 44% for something that was considered the laggard in the chip space. So it's so concentrated, but the capex is incredible, and while it keeps running, it keeps running.
Gemma Dale, thank you so much.
Thank you for having me.
It's been called the fourth industrial revolution, but one that comes with the greatest moral and regulatory questions of our time. Artificial intelligence is fast becoming entrenched in all walks of life. In part one of a series of reports on AI, Amelia Terzon investigates how the technology is being used in Australia right now.
Oh, good girl. It's okay.
Dr. Kara is spending more time with animals that she cares for as she leaves the administration up to an app.
We log in, we write the patient's name, and most importantly, we ask the client for consent to use AI to write the consult notes. Hi, I'm calling about Winston's blood results. I was wondering if you consent to using AI for me to write the consult notes for today. It's made my job so much easier, and I wouldn't want to go back to working without it.
Green Cross, which owns this practice, just did a deal with Heidi Health to roll it out nationally. The AI startup also has backing from investment firms like Blackbird.
We've been really fortunate to go through a number of rounds of funding. We'd have a couple of 100,000 users a week using Heidi in Australia.
The Tech Council's boss thinks the Australian AI industry is about to boom.
There are around 30,000 people whose main job, they wake up every day and they work on AI. We believe that gets to 200,000 by 2035 if we get the investment right.
Have you made an order from overseas agencies?
This startup is growing in size as it takes on contracts with Commonwealth Bank and TPG.
I truly believe in the power of AI and the way that we really can build so much on this.
Aparte develops chatbots that take on scammers.
Our inspection has found undeclared electronic devices. Is this some sort of joke, mate?
We call them the armies of bots, infiltrating and disrupting the networks of scammers. They're scamming the scammers themselves. Advanced conversational AI is really one key component of what we're building.
Aparte trained its chatbots by feeding real conversations between scammers and actors into a large language model. This is the same technology made famous by OpenAI's ChatGPT 3 years ago. That company is now in talks that would value it at US $500 billion. Other big global players include Claude's owner Anthropic, now valued at US $183 billion, and smaller players like Perplexity worth $18 billion. The value of computer chip maker Nvidia also recently passed $4 trillion US dollars.
We are just starting this next stage of the AI revolution, and that's being led by not just Nvidia, Microsoft, Palantir, and others. We don't believe this is a bubble. This is a fourth industrial revolution.
It absolutely is cultish. You could say that's why people suspect it's a bit of a bubble.
But the money keeps on flowing into this sector. Locally, Atlassian is also making billion-dollar plays in AI.
There is a huge focus here on who can develop AI and who can develop the fastest. And the question for Australia is, what is our piece of the pie here?
Up to 60% of large businesses here are now using artificial intelligence in some way, according to fresh analysis by JP Morgan, with the firm concluding that uptake is looking significant.
Hey Siri, search for OpenAI.
I found this on the web.
Belinda Barnett is one expert that is urging caution as the momentum builds.
I think they're selling themselves as the natural future, that we don't have much choice, it's coming at us and it's coming at us fast. One of the things that we should definitely do is keep the guardrails that we do have in place.
When it comes to implementation of current laws, we don't believe that AI needs necessarily different rules to what people expect.
Dali Kaffa hopes that his chatbot company becomes profitable in years to come.
We're weaponizing AI for good, and I think, Apate AI is really very good example of how we can build AI models for the good and for the good of everyone.
As AI continues to infiltrate all parts of life.
Artificial intelligence promises to revolutionise commerce and industry, from tech to education, healthcare and professional services. David Taylor takes a look at how Australia is positioned in this digital arms race.
From supercomputers to robots, we're processing information faster than ever, and it's set to revolutionise the economy.
We are seeing vast amounts of money being invested in AI, and also we're seeing vast returns.
It's going to affect many people positively.
Now we've been given a glimpse into Australia's future, an economy IBM Consulting says is supported by digital workers.
Thousands and thousands and thousands of AI agents that are able to perform tasks, that are going to take essentially end-to-end activities and do the work, do the heavy lifting. So I'll give you a specific example. I will say I want to change Sarah's reporting line from Sarah to Bruce, and it will go into those systems for me in the back end, and it will tell me in a matter of seconds that that is now done.
Modelling done by the Australian Finance Industry Association found that scaling or expanding the use of AI just in the finance sector could add $60 billion to the economy over the next decade.
We're not really seeing its impact in the data just yet, but I'm not surprised by that. It's clearly here. It's clearly an incredibly powerful technology.
A powerful technology that IBM says will infiltrate just about every part of the economy.
Any business that has knowledge workers will see enormous benefit associated with AI. So it could be accountants, it could be lawyers, it could be consultants like me. Anybody that relies on experience, pattern recognition, they're going to be so much more adept at their roles with AI than they are without them.
IBM predicts huge gains in diagnostic medicine, medical services, as well as tailored learning at school or university. But achieving what's possible, Toby Walsh says, needs way more investment.
We are somewhat lagging behind. We're not seeing the investments that we're seeing in other countries. We're not seeing the government make the sorts of commitments that we're seeing in other countries. The spoil is being captured by a few, mostly North American companies, and that wealth not being distributed more equally.
Ultimately, you're seeing the strong get stronger, and it's a have and a have-nots. And that's really the reality of what's happening with AI, but I believe it's going to spread second, third, fourth derivatives.
Put another way, some analysts believe the huge financial AI windfalls currently being enjoyed by the world's billionaires will trickle down to the household sector in coming years. It's something the Reserve Bank says it would welcome with open arms.
That would be transformative, and that would be fantastic for the economy and for the country. It will improve our living standards and just mean that we can make some choices about what we want to do and how we want to do it. If you've got a bigger pie per person, as it were, makes those choices a lot easier. So I think that that's a really exciting frontier.
But an artificial frontier for now.
Artificial intelligence is already reshaping the way we work, but it's also leading to hard decisions about who will work. Rihanna Whitson looks at some of the winners and losers as AI rewires the workplace.
A white-collar bloodbath.
We are heading for a catastrophic employment crisis that no one is talking about.
Artificial intelligence is coming for your job. But will it replace you or simply help you work faster and smarter?
I think where we are is a dangerous place.
People need to certainly be very alert to the possibilities of AI.
Thousands of roles have been axed at heavily exposed companies, but only the Commonwealth Bank has listed AI as the driver.
It's like we were just disposable, like we were nothing.
A dedicated CBA employee for a quarter of a century, Catherine Sullivan spent the last 4 years working with the bank's AI chatbot.
I was excited for the new technology and the new ways to assist customers.
But then her role was made redundant.
I didn't realise that what I was doing was actually going to end up with me losing my job.
CBA denies AI is to blame for job cuts in Danushi Jayatuleka's department.
We've been waiting for the axe to fall
We taught the machine, and then due to productivity gains, headcount was taken out.
It's estimated 13% of jobs could be automated by 2050 and more than half helped by AI. Industries most at risk of automation are clerical and administrative roles, while logistics, manual labour and cleaning are least at risk.
The job losses that we're expecting from our study are not enormous. AI will improve productivity, which improves incomes and improves consumption. So there will be a lot of opportunities elsewhere in the economy.
Can you have a listen to his chest, please, and let me know what you find?
Sure.
The health sector is a growth area.
I can understand your frustration, Mary.
Here, AI is helping the next generation of physiotherapists learn how to deal with all sorts of patients.
So do you mind just telling me about when this all first started?
Feeling pretty good about AI not taking my job anytime soon.
But this student is also aware of the risks AI poses.
I have talked to a few of my mates who are studying accounting and things like that, and there is definitely a possibility where AI takes over.
Unions are pushing for strong guardrails on AI, including mandatory worker consultation, job security, retraining guarantees and a national regulator. The Federal Treasurer says the government is working towards a sensible middle path to regulation. Experts say Australia should look to the European Union's AI Act.
Guardrails are there that require some involvement of people on the ground in the workplace through their trade union representatives or other worker representatives in having some sort of say in how AI is being used.
CBA reversed its AI job cuts, but Catherine's still facing unemployment after turning down a role she says wasn't comparable to her old job.
I don't even know if I'm going to be able to work full time, so it's a little bit of a worrying time for me now.
A reality more of us could soon face.
And that's all from Close of Business. I'm Alicia Barry. Thanks for watching.